Hey guys, Justin Picker. Just wanted to give a little bit of a wrap on the 2023 calendar year, just in regards to property and finance and things we've seen from my personal opinion. Again, this isn't financial advice, this is just kind of what I've been seeing with clients and obviously investors that we've been working with. 2023, it's obviously had some challenges, it's obviously had some wins as well, but the biggest challenge really has been interest rates. We obviously saw the mortgage, fixed rate mortgage cliff happen where everyone locked in at 2% and then it came off to 5.5%, 6%. Pretty rough out there. A lot of clients that I've had, repayments pretty much doubled. Some of them even a little bit more than that once they came out of that fixed term, which was, pretty rubbish and a bit of a kick in the guts from what was kind of said that nothing would happen in 2024. I think a lot of people have had a bit of distrust now in the RBA and the banks, recording record profits this year. CBA, 10 bill and all the other big four was about 7 bill each, which is massive. The Australian people doing it tough with cost of living, and these guys are just raking it in. Don't lose hope on perspective is that if you're building a portfolio, you generally need the bank's money in order to get your portfolio underway, and eventually you won't need their money and you can keep your portfolio. You might hate seeing those numbers and it might grind your gears, but it is something that you do need them if you're looking to invest, obviously take your scenario to the next level. What we've also seen as well is that the self-employed space kind of loosened up a little bit with, lenders now changing some of their requirements, not needing 2 years self-employed, or, kind of changing with wages and things like that as well if you're paying yourself a consistent salary. So that was a welcome change, especially from COVID, where those tax returns for the last 2-3 years probably weren't really an accurate representation of where your business was going. So that was obviously something that was a good point to see as well. The other part too has really been unemployment, hasn't really increased. They really expected that the interest rates were bringing them up would curb inflation and bring employment up. Hasn't done that. People are still spending. CPI and inflation is too high, even though these are pretty much the sharpest interest rate increases we've had for, decades. Very, very interesting times to see that. And it's going to be an interesting look into 2024 and how that's going to play out. Now, a common question that I am being asked is, are rates going to go down in 2024? It's going to really depend on the data. I mean, as I said, migration's really, really strong. People with obviously cash in the bank that are getting a solid interest rate are now going spending. So, your retirees and pensioners and stuff like that. It's fair game to them if they've been holding onto their cash for too long. Something that in 2024, the outlook is going to be, who knows when it comes to interest rates. The economists still get paid millions and they can't accurately predict it 100%. Obviously, you've got to look at your own scenario and work out what's going to work best for yourself. I think one thing is for certain, that the supply and demand issue is not going to change. They just cannot build houses quick enough in order for the people that are coming through. If we've got migration of around 400 to 500,000 people, each year, and that's obviously going to be going to these main kind of capital cities, it's obviously going to put more pressure on the housing market. And I think that's going to continue even if interest rates continue to go up. People need a roof over their heads. People are coming in from overseas with cash and they're willing to buy. And I think it's more the average Aussie, who might have had that house at 2 or 3% but bought, 3 years ago, they're the ones that are going to feel the squeeze. I don't think that pain is going to stop anytime soon, but we'll just have to obviously see how it goes. Hopefully it eases, but I think rates of 5, 6, 7, 8% is going to be the new norm. Bye-bye to 2 and 3%. They were a good time while they lasted, but otherwise, we would look at 2024, hopefully with a bit more optimism and opportunities. If you can take them, certainly seize them. And if you need to put a plan together for 2024, certainly reach out to us because that's what we're here for. Really do appreciate your time and thank you so much for supporting us throughout the year, and I look forward to working with you in 2024. Cheers.